So let's talk about bias, because I think it's one of the most important things to learn, and also one of the things where people make most mistakes with, because they tend to like put some emotion into the equation, thinking that price might reverse, might make like a top or a bottom, but the best thing is just let price tell us if it wants to reverse or create a top or a bottom. So the thing with bias is we can, of course, look at structure, like being a high and a low and a high and a low. However, what I like most about confirming my bias is looking at which PD arrays are being respected. And is it a bearish order flow or a bullish institutional order flow? So the institutional levels are the levels which are created by PD arrays. And if you keep that in mind, then you'll start to see that when we have a fair value gap that gets respected bearishly, price moves down, creates another fair value gap displacing lower, price pushes down again. So what is this? This is bearish order flow, and this is the euro dollar on the daily chart, but it doesn't even matter because you will see this on like every time frame. Price trading lower, then where does price come back up to? And let me put on my cursor so you can see it better. Into a order block. So another institutional level, price pushes down until it reaches a bigger drawn liquidity, being a massive sell side with some equal lows. So now we can say, all right, let's just like YOLO long here. But of course, that doesn't work, right? We still need to see if price wants to flip and start respecting bullish PD arrays. And what do you see over here? We have a fair value gap. And this is the first time, because here it didn't happen, here it didn't happen, here was the order block, here it did happen. Price closed above this fair value gap and then tapped it again as support and started trading higher. And right now retracing again to another bullish institutional level, being a breaker block. So you can already tell what my bias then is gonna be for the next few weeks around this chart. But how can you trade this, right? How can you trade it when you're like, all right, we took out major sell side. How can we know if price will reverse here? Well, then you can drop into a lower time frame. So let's go to the 1 hour. And let me go to that specific day because it was last week or the week before that. Let me see here. This was the major sell side liquidity, right? So let's see if let's put some reverse. So we have a bar play here. And let me remove this. So this was the daily fair value gap, and that one had not been violated yet. That came in the days after that. But how to know if we flip or not? So we create a top or a bottom. We need to be patient, really, really patient. So right now I'm on the 1 hour. And what do we see? If we look at the gaps, we had a 1 hour fair value gap, bearishly. Price tapped it twice, went down. Bearish, big sibby. Price tapped into it, barely. And it pushed down. Over here on that wick. So this is bearish order flow. So your bias should be bearish at least until the bigger sell side gets taken out. But maybe it will even want to trade lower. So what do we see after that? We see another bearish fair value gap form. This one. Price trades through it, but violates it after that, taking out sell side once more. And this was really early. This was overnight, so it's not in the kill zone. And what you like to have is that price makes the PD arrays and respects the PD arrays in kill zones. You can always watch the video around Enigma or tap the theory from me to look more into that. So after that, we form another bear speedy array. Price still respecting it. And now we start to close above it. And also creating a market structure shift here with the breaker block. So this is the first sign, even though the bigger like daily fair value gap wasn't violated yet. This is the first sign finally that price could reverse and start respecting bullish speedy arrays again. So not here when it went through here, not here, not anywhere in here until this happened was the first sign. All right, we're starting to respect bullish speedy arrays again. And finally price went up, filled the complete SIBI, violating that one. And that's when we made a flip, so your bias can be bullish from here. So to me, the fair value gaps just tell the story. So I think it's the most important thing to keep an eye on the fair value gaps and use those as more like the confidence to your bias. And as soon as, also here, this is a 4-hour gap, as soon as it violates that, like in 90% of the times, that means we should start seeing a different order flow again. And because of the confluence with taking out bigger sell-side liquidity and then flipping the order flow, then you know you're creating a bottom. But all the price action in between, even though price came up, violating these, came down, it will start trading lower until it reaches the bigger liquidity point. So this is not a market structure shift, not at all, because in the daily, we were still respecting the daily fair value gap, and this was only manipulation to then trade lower again, manipulation to then trade lower again, until it reaches the draw. So need to keep in mind that the fair value gaps tell the story, but you need to have the narrative around it, being the drawn liquidity. So as long as the drawn liquidity is not been met, you need to keep looking at the higher time frame order flow. So this is how I look at bias, and I hope this was useful. I know my community knows that I get the bias right around 80% of the time, because they've been in the community since 6 months. We started it in September. So around 80% of the times, I'm right on the bias, right on the drawn liquidity, and right on the narrative. And I think that's one of the most important things to have, because if you train that, then you can really become a sovereign trader, because once you have the bias right, it's so much easier to get into a trade. And it's actually not about the entry point. The entry point can be whatever, but the most important thing is that you have the direction correct, and then you can make profits, of course, because then maybe if the entry is a little bit bad, but you have a little bit more drawdown, that doesn't matter. You need to be in the right direction of the market. That's the only thing that matters, in my opinion. So get your bias right, and that will help you immensely to get better at trading and take better trades. So yeah, if you would love to join a community, of course, you're welcome. We have some really nice people in there that love to trade ICT stuff, no ego-minded people, and like a little bit of a hippie culture, I'd like to call it, and I really love that. So if you'd like to join, but if you don't have any money, then you shouldn't even trade. However, if you are in a place where you would like to be better at trading, just watch all the videos I got on my free YouTube and watch all the ICT stuff, and then you have more than enough. But if you want to go a little bit faster, or you feel a little bit lonely in this space, which I can imagine because it's a really lonely, let's say, job, then of course you're welcome to join a community. I'd like to keep the community small. There will only be 200 people in there once we fill up. So that's it. And only when spots are available, then I will open up the waiting list for it. But that's it. I just want to have a great community of dedicated traders and share all my stuff in there. And of course, the community, you also get access to the course. So I think for only $55 for a complete course with simplified ICT stuff, I think it's not a lot of money, and you can become very, very profitable with that. So yeah, I hope this was valuable to you to at least see my view on how I look at bias and how I determine my bias. And I will see you in the next video. Have a great day. Bye bye.